All right, cool. So good morning, everyone. I'm Alaina Bradley with Options Bay, and we also have another brand, Investing Bay. I'm predominantly a short-term trader. I like to scout. But the cool thing about that is we have a lot of opportunities every day in the market. And I just wanted to kind of show you guys today how we go about doing that, incorporating news events, because news events always cause really nice price action. And so the example that I had this morning was Marin Software. They announced a partnership, or they're basically going to be working with Google. And so you can see yesterday, and also let me just back up. We're on a 1 day, 1 minute chart. So that's my preference for scalping. But you can see last night, they had a huge gap up on the news. They had a huge overreaction. And so I actually love to see that, because anytime a stock price kind of overreacts, then you can play the opposite direction. So you can see here, there was a nice sell-off, a lot of profit taking. The stock pretty much doubled overnight. So we had a nice dip this morning. In this situation now, it's basically consolidating. I don't personally think it's done with this rally. I think it's just kind of cooling off, and I think we will move a little higher. But that being said, I kind of want to go back a little bit to show you guys how we even find these stocks in the first place, because that's one of the biggest things that I get asked about. So I'm going to actually go, there's two really good resources that I use pretty much on a daily basis just to get news on different stocks. And let's see. The first one's going to be Finviz. Finviz is a stock screener. It's totally free. You can pay for it. There's ads that are extremely annoying, but for what we use it for, you really don't need to pay anything. So the first thing I do from this home screen is I go to Screener and just exit out of these ads as they pop up. All right, so you go to Screener and another ad. All right, and then from the screener, I really like to go to, I do predominantly trade stock options, so I'm always going to switch this option in short over to optionable. Sometimes, you can do shares too, and everything doesn't offer stock options, but just for our purposes today. The next thing I do is I go to the volume here. So you've got average volume, relative volume, and current volume. And I'm always going to crank it up all the way up to 20 million. This is something that I'll do in the morning around 9:40. You want to give the market, you want to give money time to move around the market. So I'll say around 9:40, I'll go ahead and set up my scan. And then I'll sort the volume. I'll literally sort the volume out from highest volume to lowest. And then you can see number one there is Marin. So Marin had the top volume in the market today so far. After that, you've got AEMD, and you can see over here the percentage change. You can see these are some movers. And so, of course, it's a little later in the day now, but first thing in the morning, it's really, really nice to kind of see what's really got volume in the market. So, and I don't believe Finviz updates pre-market, if I'm not mistaken. But that being said, this is what we're watching. Another thing you can kind of do from Finviz, excuse me, is on the home screen, there is actually a breakout of the biggest, like your top gainers here. So Marin again is up there, AMD is up there. So you can kind of get that from the home screen too. I just really like to get eyes on the whole market and see what's really on the move, because as a scalper, we need volume, we need momentum, and we need that catalyst. And so speaking of catalyst, I'm going to go into my second thing that I like to use, and that's Benzinga Pro. Benzinga is pricier, so I'm not going to say go out and buy Benzinga, but we build our watch list every week on Options Bay. We build our watch list from Benzinga, and so on our Instagram page and in our Slack community, we literally post the news. Like, we'll share the news with everyone, and we'll post that watch list out, so you can kind of see what we're anticipating. Of course, that's not going to be a situation where you're going to be able to scalp it, because that list comes out on Sunday, but it'll at least put those things on your radar. So basically with Benzinga, they've got this news feed, they've got a chat, and they have really a lot of bells and whistles, but this is really the bread and butter here is this news feed. So you can kind of see, let's see, so here's an article about Del Taco that just came out. Basically, it looks like Del Taco is, let's see, it looks like they're doing something with Vegas. They're doing Sorry, I'm trying to scan through this article. So yeah, anyway, this is good news for Del Taco. Looks like they've got a deal in Las Vegas, and looks like that's going to be good for their bottom line. One thing I always tell my students, when you are looking and reading these articles about these catalysts, you've got to think as an investor and not as a consumer. The best example I can think of this right now is Peloton. Peloton, during their last earnings report, announced that they were going to lower the price of one of their bikes. And a lot of my students were like, oh my gosh, we should buy Peloton. Like, we're so excited. And I'm like, you guys are thinking like consumers. Like, for me, it's great if they lower the price because I can afford that. But for the company, that's not a good thing for an investor to hear. No one wants to hear that you're lowering prices. We want the company to be profitable. So you just always want to keep that, keep your investor goggles on always, especially when you get catalysts on your stocks. I do want to jump back over to the chart and talk about the VIX, because the VIX is another really, really huge thing that you want to pay attention to in the market. Let's see. So for me personally, I trade the SPY a lot. The SPY and the VIX are inversed. So, if the SPY goes up, the VIX comes down and vice versa. That being said, a lot of events can affect the VIX and therefore affect the SPY. And so today is a perfect example. We have an FOMC meeting or an announcement today, and then Jerome Powell is going to come out around 2. I like to trade UVIXI over VXX just because I like the movement of this a little better. But that being said, I'm going to just do like a water time frame. Let's do a month. Sorry, guys, I didn't have the chat open. Okay, here we go. And I'm going to take off the extended. Actually, before I take off the after hours and the pre-market, another thing that's really important that I tell my students is you want, when you're trading, especially like day trading and scalping, you want those pre-market and after hours levels, because a lot of times your stocks are going to retest them. So I don't like to just keep the extended hours on here once we kind of get rolling. But, when you are setting your support and resistance levels and trying to find price levels, you definitely want to include those levels. But I'm going to pop them off for right now. All right, so this is a month. Let's see. This is a month of the VIX, or UVIXI. UVIXI is basically, it's an ETF that tracks the VIX as well. But that being said, you can see how we were kind of a little stagnant until recently. So until recently, we just had this crazy pop, and I'm actually going to go back on the 1 year. Let's see. Yeah, this has been a crazy pop. But that being said, anytime you see movement in the VIX, and I'll pull up the VIX as well. VXX is also, it tracks your volatility in the market. But the charts are pretty much identical. But that being said, when you start to see the VIX ticking up, that's really like your indicator that the market is about to pull back. The last, gosh, it's been like a week, or it's actually been over a week now that we've been kind of pulling back, and we're now entering kind of like this little bounce phase. But you can really track the VIX to kind of watch and see when this thing might turn around. And so for me, again, I trade the SPY a lot, and so I can even show you yesterday. I'll do a side by side from yesterday. And this is actually the part I wanted you guys to see too. So we've got the SPY over here. We've got the VIX over here. Let me go back to my 1-day chart. So I was actually in SPY puts yesterday morning, and you can kind of see how these things both consolidated. Let me go back. They literally both consolidated, and then they shot off in opposite directions. And so I believe we're on the same time. Okay, good deal. And so for me, I was kind of watching this consolidation happen, and I was like, well, the VIX is over here at resistance, and the SPY is, they're pretty much consolidating in the same range. And so the VIX broke down lower, and I've got them up on both sides. I'm sorry, guys. Haven't had any coffee this morning. Okay, no, that's right. This is SPY, this is VIX. Good deal. So anyway, you can see how this kind of double bottomed here. Just for anyone that's not familiar with your candlestick patterns, a double bottom is a bullish reversal pattern. And so we've got like our support here, and then you've got this. I didn't mean to draw a trend line. There we go. I just wanted the horizontal line. There we go. So you can kind of see we tapped that support level twice, and then it kind of shot off on the other side. And then on your VIX, we have the total opposite. We have a double top. So this is 2 levels of resistance. And then you have a neckline here, and we broke that and shot to the downside. But that being said, if you are trading one of these, you definitely want to kind of keep an eye on the other, because they'll really give you an indication of what's to come. Also, if you're really strong on charting, you can really take advantage of these. Again, I prefer UVixy, but the charts are identical. But that being said, it's really, really easy to kind of double dip if you understand what you're watching in the market, because these things totally move together. With Powell coming out at 2 today, or I think he comes out at 2:30, and the news, the announcement they're going to make is going to come out, I believe, at 2. And so typically what I've seen is like an uptick in the VIX right before 2 o'clock. So like I know last time it was like 159, and there was there was like the gnarliest red candle I've ever seen that came out. Um, and that caused the VIX to shoot up, that caused the SPY to come down. And the entire market kind of followed, behind that. It really reacted to that. And so shortly after that, though, I don't know what Powell said exactly, but he, everything kind of rallied. So after that huge dip, the market literally within minutes completely went the other way and rallied on the upside. So it's just really kind of important, I think, to one, whenever they speak at the Fed, I always try to like stream it live, and you can usually catch that on YouTube. But I was telling my students last night, there's so many things that can be said or comments that can literally swing the market wildly in one direction or the other. So I typically don't even recommend trading unless you're really extremely strong technically. I would never tell anyone to try to trade during FOMC. Now, that being said, I do believe in trading like the reaction. So like whatever comes from this, I will absolutely trade the reaction. But it's just so risky trying to hold through that actual event. Unless you're doing more longer term trading. Like if you're in there, you have time on your contracts and things like that. That's one thing, but like I like same day expirations and same week expirations, and I would never tell anyone to do that because you have an over recovery time if it doesn't work out. And I guess I should talk about what volatility actually is, because I kind of skipped over that, which I'm sure you guys have heard this already today. But for anyone that's like kind of confused on volatility, I think of it as, I have like an analogy, like a balloon analogy. So we can look at, I'm going to pull up Marin again because this had a ton of demand earlier. So basically, volatility is going to measure, let's see. And you can kind of see this reflected in your options prices as well. But volatility, I think of it as like a balloon. So if, let's say you got into Marin a month ago and it was $5 a share and you were just holding on to it. And I'm not even sure if Marin has options. So I'll use Apple as an example. I'm not sure if Marin even has options. So let's use Apple as an example. So Apple, the volatility on Apple, it tends to stay around 30%. I used to trade Apple really heavily. And I know like when they have, events or presentations, the volatility goes up. It'll come up to like 40%. I've seen it around earnings time, 50%. But I know that Apple, when everything is all good, normal, it's like around 30%. So one thing I will say to that is if you trade the same stocks over and over, you'll kind of get accustomed to what their volatility is. And so when it's higher, you'll realize that it's a little higher than normal. And you'll have a better idea of like if you're overpaying for your premium on your contract. So that being said, I think of volatility as a balloon. And so like a balloon, it inflates. So as volume and demand comes into a stock, it inflates that premium like a balloon. And so if you come in after the volume and the demand, you're going to pay a little higher for it. On the flip side of that, like a balloon can inflate, it can also deflate. So if you buy a premium that's already inflated and the demand goes away, like after earnings, for example, after an event, a presentation, um, after that demand is gone, the balloon gets deflated, as does your premium. So that's called like an IV crush or an implied volatility crush. And so I just kind of think of it like that. It also can kind of gauge the fear in the market. Like I know in like the Kabul airport bombing that just happened, that shot the volatility up. Monday with China, that shot volatility up. Like a lot of different things can kind of affect that. Um, and also with volatility, it's not just an individual company. Like there are things like the election, like COVID-19, that can raise volatility across the board. So that's going to raise volatility across all the different stocks. It's going to raise the VIX. So it's not just like a one company thing, like an earnings report. But earnings are notorious for volatility. I know I saw a GameStop contract that had like a 600% volatility, and that was absolutely insane. Um, but yeah, so just be careful. If you see a stock that you want to trade and you see the volatility is already really high, just know that you're overpaying for that premium. Just know that you can probably wait for the volatility to come down after the event and play the opposite side and not have to pay insane amounts for premiums. Um, do you guys have any questions? I feel like I talk really fast every time on here. Let's see. And I can kind of talk you guys through Marin from today because that was a big mover this morning. All right, so looking at Marin, let's see, this is a beautiful chart. I'm gonna put on the extended hours. All right, so again, we have this crazy gap up overnight. And I'm just going to kind of plot some support and resistance levels because I just want people to kind of understand how I would play CRM. Let's look at CRM. Okay, I'll look at CRM after this. I just want to show them really quickly how I would have played this Marin. Okay, so here's the high. I see a high of 11.15. If you don't understand how I got that, I just hovered over my candle and I see this wick. And then if you look at the top here, the high, you got your open, your high, your low, and your close. And then 11.15 is how I came to that conclusion. And also, if you didn't see that, it's over here too, 11.15. And so my low, let's see, you can see here is where kind of the thing started, the movement started. But I would come to this guy here because this is kind of like my low of the day. And this is like 887. So you can kind of see this candle here wicked. Actually, it looks like it's a little bit lower than that. 844. Yeah. So this, I'll put another horizontal on here at this 844. Oh, tell me that. Okay, my line's at 845. That's fine. Okay, so once you have kind of your high, this low, obviously you wouldn't have this low until this actually happened. So like, let's just pretend this hasn't happened yet. I see pre-market that this has a resistance level. And I also see pre-market that this thing, it's literally struggling to move past this high. And so if we can't break this 11.15, I have no reason to believe that we're not going to try to go the opposite direction. Another thing I'm going to kind of watch is my volume. And so I know we have volume in this thing just because there's, I mean, one, we scanned, two, there's a news article. So if you would have caught that on Benzinga or on your scanner, you would have seen that there was some volume here. So there's some momentum to be capitalized on. So 11.15. Now, if we were to play the upside to this, I wouldn't try to play the upside until we broke that 11.15 pre-market, right? So once the market opened, I'm looking for this stock to retest 11.15, which it did not do. So to me, I'm like, okay, we're going to think about the downside. So that being said, we've got this crazy resistance here. And another thing, you see this resistance, we have a little resistance here and a little resistance here, but my resistance levels are dropping. So that's another bearish thing to see from this chart. That being said, one of the indicators I like is the 50-day EMA, the exponential moving average. Again, we're on a 1 day, 1 minute. So boom, we open up. You can kind of see where they wanted to try to slap this stock. They wanted to push the price up, but we couldn't do it. We couldn't get back to that 11.15. Um, so now you have a morning high of 1087, which is lower again. So here we broke our 50, which is one of my confirmations personally. So we broke our 50 here. And so that would have been honestly my entry on the downside. Again, I don't typically enter trades this early. This is 9:33 a.m., but just from this overreaction and the amount of volume here and with this profit taking, you can hover over this candle and see the volume here, and you can see your selling volume just kept coming in. So again, typically I don't trade this early in the morning, but this was like a really beautiful setup. That being said, as long as you're below that 50, you're trending down. I have a 10 and a 20 EMA as well. So those are like my secondary confirmations. We're staying below those. And so as long as we're below that, I probably would have just, that would have been a beautiful scalp. Now, looking on to this for the rest of the day, you can kind of see we do have this solid support. Your buyers have held this price up all morning, and you can kind of see your support levels are raising a little bit. So I don't think this thing is actually done running. I think they're going to try to push it up some more, but I think a lot of people are kind of waiting on this meeting at 2, and this thing just needs to cool off. It totally gapped up crazy overnight. So that's how I personally would have played this. But I'll pull up CRM and we can see what that looks like. Did you have a catalyst for CRM? Let's see. One thing I will say about TradingView is I don't think I have all my candles. It doesn't look like. I don't know. It looks like I don't have all the candles. Anyway, so this is Salesforce. Gotcha. So it looks like CRM had a high of 259.40 this morning. So I'll go ahead and plot that. But again, looking at this, we broke our 50. And so that's my confirmation on the downside. So that would have been a nice move down. I don't like to jump in stocks that early. I really like to wait until about 9:40. But sometimes with the market, like especially if the futures are down and you open up down, then it's really kind of like a play by ear situation. But again, I tell my students, as long as you're under that 10 and 20, you're fine, because those are your first two buffers before you hit that 50. But your stocks basically all day long are going to, they're either going to break the 50 on the downside or they're going to break it on the upside. And also I have a 200 on here too. I don't know why I didn't have that. But anyway, you can see this kind of death cross yesterday. So you can see it death crossed your 50, went below your 200, and then there's your downtrend. And so on the upside, there's your support. You had some buyers step in. So that's a nice recovery play. Anytime I'm below my 200 though, if I play an upside, I'm not expecting to hold above this until we break it. So, I probably would have ridden this up, but then I like to wait this out until I get another golden cross. And there we go. So my 50 is on the upside, and then you see this uptrend. This is a little choppy for me, but I like this. I think a lot of people get a misconception of like, if you're scalping, you're not there for a long time. So like a lot of my trades might be 5 or 6 candles, and we just do like heavy volume. So that's really the gist of scalping. You really can't marry those positions. You've got to get in and out of there. Day trading, you can get away with it a little better, but like, I don't know. I just feel like with day trading, it kind of trains people to ride out reversals. And I don't think that's a good habit to have if you want to scalp. So you really want to be able to like differentiate the two. A lot of people kind of fuse day trading and scalping together, but they're very, very different. Day traders, you definitely still want to buy a little more time. Like a scalp, like this is beautiful. This drop. As a scalper, I probably would have caught one of these little drops and left before this bounce. As a day trader, you're going to ride all this out. And so when you're thinking about like time decay and things like that, especially if you've got volatility involved, when you are trading something with a lot of volatility, that's going to affect your premium. So like you really can't ride out those crazy reversals like that. So this isn't really a crazy reversal, but that being said, I just don't like to ride out reversals. Day traders, you buy extra time, you can do that. Same day expiration people, you do not want to ride this out all the way. Um, let's see. But CRM, this does look good. You can kind of see it had some resistance here and it's still stuck in the same place. Um, it kind of has a little bit of resistance up here and it's having a hard time up there. Yeah. And another thing too, which I feel like I've gone a little off topic, but if you watch your moving averages, like your 50, especially the 50 and 200, you really watch how they move in relation to one another. And so you can kind of see here, the 50 came up over the 200 and they kind of spread out and your stock was on an uptrend, but then your 50 kind of curled down and crossed back down and you see how they get closer together and there's your trend reversal. And so here's your downtrend. You can kind of see the 50 popped here, like it was retesting to come back over the 200 and it rejected and it came back down. Over here, same deal. So they moved apart. It's kind of like reading the MACD, honestly. It's like a little bit of divergence. And then here they converged, they came back together, and then there's your uptrend. So here, if I'm looking at where CRM is now, they're kind of wide open, but there's a little bit of a curve there, like it wants to kind of come back down. But for now, it looks like they're a little wide open. But yeah, that's another kind of trick I use is just watch how the 50 and 200 move in relation to one another. Um, let's see, were there any other moves today? AEMD. And I do want to pull up the VIX and see if it's ticking up because it's about 12:30. I don't think it has yet, but you can kind of see there's a little support here. And you can see, I mean, really what we were just talking about. So you see the 50 pulled apart from your 200, and now you can kind of see these lines are getting closer together. So that, and there's your MACD. MACD is still, it's still in a sell, and this is still trending down, but you can kind of see even the selling volume isn't what it was earlier. It's kind of sloughing off. Um, and then your RSI has a little more room to come down, but I would say I would give this about another hour or so before it kind of starts to retest this 200. Let's see. And what was that other ticker I was going to pull up? It's AEMD. So yeah, just as you guys come across movement in the market, as you guys come across like news and catalysts, the biggest thing is you don't want to get caught up in chasing. And I think when people are like brand new to the market, they see a stock like, that had a huge gap up and they're like, oh, I got to get in there. And it's like, sometimes you miss the boat. Sometimes you didn't though, right? Like this stock here, this had a nice move overnight. You can kind of see it came down. It bounced off the 200 in this case and it rallied, but you can see this thing broke its pre-market high. So like, let me just show you this. You can kind of see these wicks here, this like little family of wicks. I just drew my resistance where they were predominantly, but you can see here, it kind of struggled there for a second and then it popped right through it and it broke a new high. So this thing wasn't actually done rallying yet. In this case, again, my confirmation is that breaking up over the 50. And so there, we have an entry. And this one is the safe bet. It's like 947. I approve of that. I like to wait a little bit. 946, 947. This is really choppy, but again, these are shares, so it's not as crazy as options can kind of be sometimes. But with this, this would have been a nice little ride up on a scalp. On the downside, this thing has like some really serious support here. So I wouldn't even try to play the downside on this. And really, this is like a $5 stock. I don't know that they have options or not, but I wouldn't even try to play the downside of this just yet because there's a ton of volume here. And you can see, like, you can literally look at this. You don't even have to understand price action, but you can see the buyers are holding this price up. They're not letting it come down. And it just keeps retesting that resistance level. So yeah, I think this has more upside as well. Let's see what else is on the move today. WIMI. And I'm honestly more of a technical trader than a fundamental, but I literally learned my lesson on NVIDIA. NVIDIA had an acquisition a few months back, and I had a plan to scalp it on the downside, and basically I didn't check the news, which was so stupid, but I didn't check the news, and it rallied. The stock totally rallied. So I think it's really important for traders to kind of fuse both. Like you want to take the fundamental piece and you want to take the technical piece. Because sometimes one of them will trump the other. So you might have like a really strong fundamental catalyst, but the chart setup is bearish, and sometimes it'll be bearish, and vice versa. So you really want to make sure that you're fusing everything you know. Um, Make sure you're fusing everything you know, and to make the best decisions possible when you're trading. I cannot stress that enough. Let's see. So this WIMI, I've never heard of this ticker before, but it doesn't matter because all we need is a chart when you're technical. But that being said, I really like this chart this morning. It is a little bit of a choppier ride, but again, it's a $4 stock. So you can kind of see out the gate, it was already above the 50. We got our golden cross pre-market, and this just pushed up. You had a bit of a sell-off here, but you literally stayed above your 50 all morning. And then you did hit a high, it looks like a 523. And then here's your downside. So this thing's coming down, and you can see here, if you look at this 50 and 200, it looks like they want to cross. A lot of times, I will say this, you really want to wait for them to actually cross. Is when I've been trading this spot, I've noticed a lot of times the 50 and 200 will kind of come together and they'll like kiss each other and then they'll break apart. They don't actually cross. So you really want to wait on those confirmations. But again, if you're playing the downside for me, here's my confirmation. We're below the 50. As long as we stay below the 50, I'll ride this down. But you can see your RSI, it's a little oversold now. But your MACD is just getting started. So this looks like it wants to kind of cool off a little bit still. Yeah, in this case, I'd probably wait and let the stock retest. Like if it's gonna break this 200, I'd probably let it kind of retest the upside first and then catch it down again, because this RSI can't really fall too much further. You don't want to jump in when something's already way oversold. Does anyone have any questions? No, that's a little bit. Let's see if there's anything going on. IDEX just got news. Oh, we can look at FedEx. I don't know. I know FedEx just had earnings, but I don't know if the stock reacted. Oh yeah, it's down. Goodness gracious. Okay, so FedEx. This is a good example of why I don't play earnings. But you can see here, this is the earnings call, huge sell-off. It does have a bottom. Jeez, can't even see it. Okay, so it looks like we have a low of, what is this, 228.99. And again, I don't play earnings whatsoever, but I do play earnings reactions. And so now, when you come into this thing, I would be looking to play the opposite direction. So this will be like, for me, I would wait on a confirmation and play the upside. The downside, this thing's been beaten down already. But looking at this, you can see how the 50 and 200 are getting closer and closer together. So one thing is, you've got this support level, so you definitely want to watch for this to break support and continue down. But once they start coming together like this, let me put this back on auto, sorry. So once these start kind of coming together like this, like they want to reverse, then you can start thinking about the upside. And the best thing about this is like the volatility is out of here. So like you're not paying, double what you would normally pay for these premiums. Even if you wait until tomorrow, this thing has a long way to recover from. It fell down from 253, which is insane. So it's on clearance. It's down, looks like 20 points now. But this would be a nice recovery play for me, whether it be this probably would be more of a swing, to be honest. But you could scalp too. Typically when I scalp, I like cheaper contracts. So I wouldn't kind of load up on FedEx contracts to scalp them. But for my swing traders and my long-term traders, this is an excellent entry, because I'm really bullish on FedEx still. I'm trying to think. I don't know who else reported earnings. AutoZone. Oh, Adobe. I think AutoZone needs to split. That stock is insanely expensive. Okay, Adobe, same deal. Adobe just took a hit after their ER, and then boom, recovery play. This is a beautiful recovery play. It looks like it sold off a little more this morning. And now this is kind of an example of what I meant earlier too with your 50 and 200. You want them to move apart, and these are totally intertwined. I do think that Adobe will push higher, but I think I really want to see this 50 break above that 200. And when you're swing trading, let me point this out too. You're not planning your entries on a 1 day, 1 minute chart, right? So that's a huge thing. Depending on how far out you're swinging, you definitely want to find those entry confirmations a little further out on your chart. Even 5 days honestly is too short. I don't recommend swinging weeklies just because you don't have any recovery time. But this is a 1 month chart, and you can see we're actually still in a death cross on your 1 month chart. This just like earnings just like pushed it over. Let's see. So yeah, that being said, this actually still looks bearish on the monthly. So I just wanted to differentiate that. Make sure when you're swing trading, you are not planning your entries and exits on a 1 minute chart, because that's not a good look at all. But yeah, I think that's all I had. I just wanted to kind of show people how to kind of trade like we do. We scalp a lot, like I said, and we just use these. It's finviz.com and Benzinga Pro we use for our news catalyst. But there are some other sites like Yahoo Finance is free. Um, Bloomberg isn't free. I know like Wall Street Journal isn't free. But even like Twitter, there's a couple Twitter accounts like let's see, like Zero Hedge is a really good one. Market Rebellion, Walter Bloomberg. There's a lot of ways you can kind of get news sent to your phone. A lot of times it's going to be a little delayed, which is okay because that's why we really focus on playing those reactions. You can kind of let people get in and do what they do with the stock, and then you can play the opposite direction. Or if it's like a continuation, you can totally jump in on a dip and ride the continuation. Um, with TradingView, I actually haven't ever traded with a brokerage through TradingView. I usually have my charts up on my screen and I trade off my phone. But I know like TradingView has TradeStation. I have some students that do use TradeStation. I've just never used it personally. But I use TD Ameritrade and I use Power E-Trade for my trading, but I do that on my phone. I just don't want to be like, use TradeStation because I've never personally used it. I don't know anything about it. Yeah, the VIX, I'm really anticipating this to bounce soon. Does anyone else have any questions? All right. Well, if you guys do have questions, we've got a free Slack community. If you go on our Instagram, it's just Options Bay or Investing Bay, either one. In the bio, there's a number you can text. It'll send you an invite to our Slack, and it's totally free. We have some free resources on our website. We've got some classes coming up. We've got like a scalping masterclass. We actually have some free classes as well. We've got a trading psychology class and a long-term investing class. Then those are free of charge. We've got, oh my gosh, Clubhouse. We're on Clubhouse every Sunday. And we actually do our due diligence room where we go over different catalysts in the market, different news articles, and that's where we get that watch list from. But if you guys ever have questions or just need help trying to navigate the market, we're here for you and we're happy to help. And we have people of all trading levels, so it's not just beginners. Yeah, I can give you the link. Let's see. I'll drop the Slack link in here. There you go. And I would say too, I think it's really important to back test, especially if you're new to the market. Even if you're not new, back testing is like one of the most powerful tools that I've come across in trading, especially with catalysts. A lot of times different stocks react to different catalysts differently. So, like Apple, for example, Apple tends to kind of run up before an event and then kind of sell off after an event. And it's like a pattern with Apple. And so it's kind of cool that you can go back in time and like back test that. And what back testing is basically your paper trading on previous trading days, but it's like in real time. So you can practice like your entries, your exits. You can practice. I mean, I practice scalping personally, but you can practice swing trading. Like we went back and back tested March 2020, which was insane. Um, but it's just a really cool tool, especially if you're not familiar with the Thinkorswim platform. It really helps you kind of get acquainted with that platform outside of market hours. And I just really recommend it for anyone, especially when you're trying to learn about like the VIX and your catalyst. You really want to like, you can literally go back in time on the date of the catalyst and trade the catalyst. Or trade the reaction, or you can trade the run up, or however you want to kind of flavor that, you can do it, and it's really a good use of your time. Paper trading is cool too, but I feel like when the market's open, I want to see the live market, and I'm typically trading it. But back testing is something you can do at night, you can do on the weekend, you can do it at 3 a.m. if you can't sleep. It's always there. So and how you do that, you just log into Thinkorswim. The feature is called On Demand. You'll see the button. You'll log into your live account, and you'll see the button in the top right. It's called On Demand, and then it'll take you into that paper account, and you can totally practice. Do it with your friends, do it alone, doesn't matter. Just get your back testing in, because it'll literally make you such a better trader and investor. Okay, but that's really all I have. I feel like I'm rambling. Thank you so much for having me, David.